Good morning students, welcome to 11th Commerce Business Studies. In our last video, we have started our fourth chapter, that is business services, and we studied what is business services and types of bank. So today we are going to focus on functions of commercial bank. Primary function and secondary function. There are two types of function performed by commercial bank. What is primary function? Primary function is again classified into two, that is accepting the deposit and lending the money. On one hand they accept the money and on other hand they grant the loan or lend the money. So let us see in what way they accept the money. One by one we'll see how they accept the money. This is their primary function. Now accepting deposit, there are various ways in which commercial bank accepts the deposit, and bank offers different types of bank facility. That means different type of bank accounts you can open, different type of customers need can be fulfilled by the bank, and even bank accepts the deposit in various ways. That's one and the same thing. So let us see different types of account which bank offers to the public. Number one is fixed deposit account. The name itself will tell you it's a fixed deposit account. So where you have to deposit, but the name fixed means you have to give a fixed amount for a fixed period. So money is deposited in the account for a fixed period, so it is called as fixed deposit account. After the expiry of the specific period, for example, you have kept the 5 lakh rupees for 5 years. 5 lakhs is the fixed amount, 5 year is the fixed amount. So after expiry of this 5-year, person, that means the person who have deposited, can claim his money from the bank. And usually the rate of interest is maximum in given by a bank on this fixed deposit account, because bank can use this amount for 5 years. They know it's for a fixed period, and this is normally for a longer period of deposit, so they have the higher rate of interest on the deposit. So I keep 5 lakhs for 5 years, I'll get highest rate of interest as compared to other accounts. So I think it's clear: fixed deposit, fixed amount for a fixed period, and higher rate of interest. The second one we'll see, that is current deposit account. Current deposit account is opened only by businessman. This facility is given by bank only for businessman. The account holder can deposit the money and can withdraw the money whenever they desire. As the deposit is repayable on demand, it is known as demand deposit. Okay. Now whenever you want he will withdraw, whenever you want he will deposit, but it has to be withdrawn by check, and no interest is paid on this current deposit. Bank is not going to pay any interest on fixed deposit, maximum interest, but current deposit no interest. Rather, bank charges the interest from the business person, the businessman who has a current, because bank is providing you overdraft facility. You can withdraw more amount than available in your balance. So bank will take the interest from the account holder. Third one is saving deposit. Now saving deposit means it has been normally for a household or any person who can have a saving habit in themselves, who can develop the saving. I can deposit, suppose I have 500, I can deposit 500. I have 1000, I can deposit 1000, 2000, 5000, whatever amount I have, I can deposit this. I can create a saving habit by opening a saving account. The aim of saving account is to mobilize the savings of the people. Person can open this account by depositing a small amount, very small amount. Even now it's available for a zero balance account. He can withdraw this money from his account and make additional deposit at will. Whenever he want, he can withdraw. Whenever he want, he can deposit. So account holder gets interest on the deposit, but less as compared to the fixed deposit. Fixed deposit holder gets highest rate. So here the rate of interest is lower as compared to the fixed deposit. Let us see next one, that is recurring deposit account. Now the aim of this recurring deposit is to encourage the regular saving habit in people. Now don't get confused, fixed deposit, fixed amount for a fixed period. Here, for example, we keep a fixed amount like 100 rupees, 500 rupees. Every month you have to give that fixed amount. 500 or 100, whichever is the amount. Now on the screen you can see a depositor can deposit a fixed amount, say rupees 100, every month for a fixed period. Like I agree with the bank, I am opening a recurring account, I will deposit 500 rupees every month for 5 years. So 500 every month, but in fixed deposits lump sum you have to give altogether 5 lakh rupees. Here it is a saving habit. So the amount which come together will be given you back with the interest, okay, at the time of maturity. Like I will pay 500 every month, and after 5 years I'll get my all the amount, matured amount, principal amount with interest. So the interest rate on this account is higher than saving account but less than fixed deposit account. Let us see multi-option deposit account. This is very interesting. Here there are two types of account, or we can say twin account. Here the saving account is been opened, and in which deposit is excess for a particular limit gets automatically transferred to a fixed deposit account. Suppose if I open a multi-option account and I say my account will be having a saving deposit till 2 lakh rupees, and I still keep on depositing and my balance goes above 2 lakhs rupees, then whatever amount is above 2 lakhs will automatically get transferred to fixed deposit account. So on the other hand, in case if fund is not available in my saving deposit account, so as to honor a check that we have issued, the required amount automatically gets transferred from the deposit account. For example, now 2 lakh rupees, more than 2 lakh rupees, it will go automatically to fixed deposit. Now I have to give a check to someone more than 2 lakh rupees, and I gave a check. So automatically from fixed deposit again it will be transferred to a saving account. So here the customer can have a benefit of both saving as well as fixed deposit account. So this is called, the customer has a twin benefit, both the benefits he can have. Interest rate is more but it is lower in the, and there is a risk in dishonoring a check. Now this was accepting deposit. So these are the various types of accepting deposit. Let us see lending money, granting the loans. Lending money with the help of money which is collected by bank. In this way they collect from a various deposits. So commercial bank lends finance, give money to businessman, to farmer, to small scale industries. The main way of lending money are as follows. Number one is term loan. Term means time period, short term, long term period. These loans are provided by banks to their customers for fixed period to purchase the machinery, to purchase truck, scooter, house, education, whatever. But the term period, like why it is said term period, the borrower who takes the loan have to pay this loan in monthly, quarterly, yearly, half yearly, annually installment. So there are installment which they have to pay on a particular term period. So it is called as term loan. Next comes bank overdraft. The customer who maintains a current deposit account, and I said only businessman maintains a current deposit account. So they withdraw money over than the balance which they have. So it is called as overdraft facility. So here overdraft means, suppose I am a business person and I have my in my account 10 lakh rupees and I need more than 10 lakh rupees, but I have current deposit account, so I can withdraw more than current lakh rupees through check, only by check, not cash. So this overdraft facility is being provided. So that is loan to me. I have to repay this back to bank. So the current account holder takes permission from the bank to withdraw more money than the deposit. The extra money which is withdrawn is called as overdraft. This facility is available only to the trustworthy customers for a smaller period. So I have to give this money back to them. And this facility is given against the security of some assets. Okay, not free, they are not giving it to any of the customers. The one who is trustworthy and the security is being given, interest is charged on the actual amount which is over withdrawn. Suppose I have 10 lakh rupees, so 10 lakh rupees which I have withdrawn, it's my money. Bank will not charge interest on that. Above 10 lakh rupees if I withdraw, on that amount bank will charge interest. Next comes cash credit. Under this agreement arrangement, everyone knows that bank gives a credit card, debit card and all this things. So cash credit means cash loan. So you have a card where you can swap this card, but there is a limit on this card. Okay, so this cash loan up to a specific limit. You hold a plastic money, that also has a limit. So current assets and other securities are there. The bank opens an account in the name of the borrower and allow him to withdraw the money from time to time, subject like in a month you can withdraw this particular limit, in a year you have. So sanction limit is there, and interest is charged on the actual amount which is withdrawn by your card. Next comes discounting of bill of exchange. Under this, bank gives money to its customer on the security of bill of exchange before the expiry of bill in case of customer's need. For this service, bank charges discount for the remaining period of the bill. Now suppose here are two person A and B. A and B both have an agreement and they have signed a bill of exchange. A have taken money from B. Okay, now they have signed an agreement and they said that we are going to on the bill of exchange on the next month 15th September they are going to the person A will give money to B, but B is in need of money before 15th September. So what he is going to do, he will go in his bank and he will submit this bill of exchange and get the money from bank against this security of bill of exchange. So bank will give him money. Later on this bill of exchange, bank will submit it and get money from person A on the specific date. So this is called as discounting of bill of exchange. We have seen the primary function of commercial bank, part A and part B, that is accepting the deposit and lending the loans. Thank you so much. Keep on watching and keep on learning. Thank you.